So, what's one moment that really shaped how you think about wealth today?
Well, the moment that I realized is probably about 6, 7 years ago that 100% of why I'm going too slow was all my fault. Every every
I like
every
that.
every obstacle that I was everything I was every reason I wasn't moving fast enough for were all things I could control, whether it been hiring faster or hiring right or raising more money or I think a lot of entrepreneurs they think they have to. You hear so much you have to have these different buckets of income or different ways to get income or passive income, and I fell into that trap where you had too many things going on versus going deep on one thing.
What if building wealth isn't about getting rich overnight, but about learning, adjusting, and stacking wins year after year? So today's guest is the definition of that kind of longevity and grit. He's Chicago-based real estate investor, founding partner at GC Realty and Development, and co-host of the Straight Up Chicago Investor podcast. Over the last 2 decades, he has renovated 500 properties, managed 7,000 units, scaled in residential, commercial, and industrial markets. And through it all, he has learned what actually works and what does not when it comes to building real durable wealth through the real estate. So, Mark Ainley, welcome to the Wealth Vibe Show. I'm so excited for our conversation today.
Well, I'm honored to be here, so thank you for having me on.
And our topic is from birth to business, building wealth the long way. So you've been in this game for past 2 decades, and I know that journey had ups, downs, and everything in between. So what's one moment that really shaped how you think about wealth today?
Well, the moment that I realized is probably about 6, 7 years ago that 100% of why I'm going too slow was all my fault. um, every every
I like
every
that.
every obstacle that I was everything I was every reason I wasn't moving fast enough for were all things I could control, whether it been hiring faster or hiring right or raising more money or I think a lot of entrepreneurs they think they have to. You hear so much you have to have these different buckets of income or different ways to get income or passive income, and I fell into that trap where you had too many things going on versus going deep on one thing.
I like that, going deep on one thing. I think that's, yeah, where attention goes, energy flows, right?
Yep.
That's what it means when you say, when you go deeper on one thing, because you focus on one thing and you make it happen, basically. So, but you mentioned here that either you could be slow or you could be fast, right? So sometimes if you're moving really, really fast, are there things that you can, kind of overlook or miss in that journey? How would you kind of create the balance? Going
Yeah,
slow
I
and
think
fast at the same time.
I think we were moving fast, but we're moving fast very wide in too many different things. So that was part of the issue we had. But had we been moving fast in one direction, it would definitely been further there. But to answer your question, the mistakes, yeah. So I mean, there's so many of them, right? A lot of what I didn't do earlier was hire more people faster, outsource. I think we were always 6 months too late, and then you made it. Maybe you rushed to hire and you didn't hire the right person. I think that was probably one of the bigger things: outsourcing and investing in having the people to delegate to.
I think delegation is the number one thing when you're looking to scale or doing something better, because you're bringing more like-minded people into your client, and you're just, going with full throttle to the next level, basically. But initially, when somebody starts, they think, oh, it's kind of one-man show. I'm going to do it everything myself, or I know it, everything. So you are basically CEO, chief everything officer, basically, right? So how do you go from chief everything officer to somebody who learns how to delegate and get to a place where you have more scalability
Well,
and more projects?
yeah, I think I think what I didn't know back then is the level of maturity or how I had to step up my own leadership in order to start hiring people. Now, don't get me wrong, I started hiring people at some given point, and I didn't do that right either. Like, hire people and just like treat. I don't necessarily treat them like crap, but not treat them like you should treat an employee. The expectation I had for them, or the amount of information I would give them for the outcome I expected from them, was horrible. Yes, it was all in my head. I thought about it, but did I give them to the right way and paper so they can succeed? So I think hiring people and putting the effort and the energy in to see that they're successful, because for me personally, or I see entrepreneurs do this all the time, is they hire someone and they don't set them up to succeed, which then, at the end of the day, the entrepreneur just says they sucked and it was a bad hire. And they might not even hire someone else again because they're scarred by the situation. Or it takes them a couple of those people to realize, like, no, the problem's not the people you're hiring, the problem's you. And that was me for a lot of the early hires we had.
I think this is a very key thing that you said, the people are not the problem is you. So can you share with us your experience, what was wrong? I think not proper having the proper KPIs or proper SOPs, because maybe you're not giving enough to the hired person to run with it, because you also mentioned, you're not helping them succeed. And if they're not succeeding, you're failing with them at the same time.
Yeah, I think the biggest thing that I feel today, that it took me many years to get to this point, is, man, everything is my fault. Everything that is happening. Even now, where we have a couple of different layers in our company, and it might be a frontline person that just didn't
Yeah.
do something, or like, I can't believe that person did that. That's still my fault, and it's my fault because as a leadership team, we didn't put the right resources in. We weren't focusing on the right problems. We didn't do the right training. Whatever it might be, it's always my fault. And I think some of the things, so that's kind of on a bigger scale of, if as you're growing, if you really have that total accountability for everything, the extreme ownership of it, then that actually makes life easier. When you start realizing how much control you have over everything, yes, sometimes it's daunting, but it actually puts it in perspective. Like, you have control over this versus like, just this business beats me up all the time. But to answer your question specifically, is, you know not even going as far as SOPs or any of that, but even if you're gonna just, what's the expectation? Like, these are the three things that I expect you to do every single day, and this is the outcome. And if this doesn't happen, get back to me at this point. Or, what we used over the years was this chart of, hey, these are all the decisions you make. Then in the middle is, here's all the decisions you can make, but let me know. And then here's all the decisions don't make, and let me know. So it's even just these little frameworks that you put in place versus. And this ends up being an entrepreneurial problem beyond me, is you just you say half of what you're thinking. Or the problem is, as I'm talking to you right now, giving you something to do as my employee, I'm already thinking about what I'm doing 2 conversations from now, and that ends up being this horrible back to set up some for failure. So giving clear, concise instructions. And you know what's funny? It actually even goes back to now what we do today, is that job description. We put out job descriptions for many years where it's just a bunch of nice words on a piece of paper, but you really should be having all the performance measurements, all the how they're what winning looks like on a job description. And hey, you look online anywhere, Career Builder or something like that, just a lot of job descriptions just fail right there. And I think we've taken a large stride in the last few years to like make sure we're all on the same page with that, because that's ultimately what someone's going to raise their hand and say, hey, I might be interested in working there.
Mhm.
And if you're not on the same page with that, then you're going from downhill from day zero.
And I think these new tools now, ChatGPT is teaching people, how to think, how to talk, because, if the prompt is not right, whatever you're talking about is the prompt, right? You didn't get the right prompt to the hire. So how can he produce the results, whatever you're looking for, right? We talk about ChatGPT, oh my God, it's garbage in, garbage out. I mean, that's what we were doing at the personal level.
Yeah.
So all these ChatGPT tools, they're teaching people actually how to ask things in a correct way to get the right answers. But okay, let's talk about something else now. You have renovated over 500 properties. So how do you stay grounded through that many moving pieces? And what still excites you about doing those deals? Because it's 500 is a lot, right, to manage.
Yeah, so we did. I mean, this is over a span of 10 years, from '08 to 2018. So we started when the market crashed. Up until the market crashing, like, I didn't even know what cash flow was. Like, in the Chicago market, it was it was like, how long can you hold it before the price goes up, was pre crash. But with the opportunity that was created after the financial crisis, we just continued to buy and do the Burr strategy, and we did that for 10 years. And ultimately, we got out from doing that because at the time, it was 2018. We thought competition was stiff. We thought prices were really high. We thought all these things, but we thought that we could put, if we focus all our energy in the property management company, we could take that and do something really fabulous around that. But as far as the rehab goes, I think that is. Um, that's fun being able to walk into a decrepit, outdated, maybe falling apart house, maybe missing a roof, and be able to see what it could look like. And there's just such a level of reward of before and after of what you're doing. And I think that's what keeps me going back. We're actually, we slowed down for a while there. We got into some industrial real estate. And lately, these last couple of years, we got back into just buying some Class A residential stuff. And it's each deal excites me in a different way, just taking something old and making it new.
You said Burr. Burr is still a hot topic, right? So, but it's not as easy as social media makes it seem. So, what's one common mistake people make trying to burr their way to wealth?
Um, yeah, I did. I did a whole hour and a half webinar on this one. But a lot of what was tough to do is if you don't get a good appraisal, if you go over budget,
Mhm.
that perfect burr on paper, you could end up leaving 30, 40 grand that you weren't planning on leaving into the deal. And if you're doing multiple at one time, you might get a good appraisal on one and a bad appraisal on the other. And you have to roll with it and you have to figure that out. So ultimately, we ran into that issue where we were getting to hundreds of properties and we were holding them all. That was the goal, to build a portfolio and hold them, but we were starting to run out of cash for the leaving 3% in here, leaving 4% in here. So we're starting to run out of cash. So we said, maybe we should just sell one or two of these. So we put something on the market and on Bigger Pockets, someone came in and bought 27 of them. So we started doing a
Wow.
turnkey, but I think the amount of money you have to leave in at times, people underestimate if the deal doesn't go perfect. And the reality of today's market right now with Burr is still a great strategy to not have to put 20 or 25% down, but that doesn't mean that you're going to be free and clear of leaving money in the deal. If you get right now, if you're able to refi out at the end of the Burr and pull all your money out, that's awesome. If you have to leave 5% in, that's still, because the chances are when you're leaving 5% in, you still probably have a really healthy amount of equity in the deal based on how you're financing it. So I think the most attractive part about the Burr strategy still today is, yes, you got to put money in, but you have a large pot of equity in the deal if you did it right.
And you have a property management company too, right? That's how you're managing all these 500 properties, correct?
Yeah, yeah. So a lot of so we started the management company back in 2005. We've been doing this since 2003. And we
Hmm.
slowly kind of, it was more of a means to an end back then. We were trying to grow this brokerage development company. And, people are like, oh, please, manage this. And it was more of like, all right, if we manage your two properties, they'll cover the electric bill. And then someone's like, oh, you manage my property. It's like, all right, now we get water cooler in the office. So a lot of it was a means to the end. And what it turned into was when the market crashed, you had all these accidental landlords and you had all these investors that came too, where all of a sudden we're managing a few hundred units. So it's like, wow. And then that grew and that company, our management company grew big time while we were doing all these rehabs in that '08 to 18 period, but it grew wrong. And we got back into it and it was just messy. We got to about 200, 300 doors. We didn't have a process in place. We didn't have a policies and we didn't have any of that stuff. So we actually had to take a step backwards in 16, 17. And then that's where we realized how much opportunity there was, ultimately leading us to doing less development and more growth on the management side, because there's there's definitely a need for good property managers out there, and the amount of property people that have their properties with a professional property manager is less than 40%. So the opportunity to manage out there, that blue ocean of opportunity is huge. So
Wow. So, what role this management company play in accelerating your personal wealth journey?
well, I think it becomes a vehicle for investments, because not only do I work in real estate all day long, right? People call me like, should I manage it? Should I sell it? Or should I rent it? Should I sell it? And you create
Hmm.
opportunities to buy properties that way. Clients that are with us for years, that they might want to exit, and but maybe they don't want to kick out the renter and do a rehab. So it creates opportunity that way. But at the same time, the cash flow it spins off. We're a fairly good sized company now, where we have in-house maintenance and we manage 1,400 doors. So the
Hmm.
cash flow it's able to kick off, we're able to then go reinvest in projects that we want to take on these days. So I always tell people that you look at real estate, most people that are investors in real estate, they didn't make their money doing real estate full time. They did it doing something else. And if you could have a real estate adjacent, call it career, like we have this management company, and be able to have the access to investing, that's golden in itself.
So what do you guys invest in? Beside this property management company, you have other investing vehicles too.
Yeah, yeah. So so when we were doing all those rehabs in between 0 and 18, we started selling a lot of those off to turnkey. Turnkey was the big thing back then. You sell them to people on the coast and get these 10, 11% returns, and we kept the management for most of that. So that worked out for the management company. So we took a lot of that money that we made on that, and we started buying industrial properties, which were a lot of the properties that we were actually managing for people that were retiring and stuff like that. So we had good access to deal flow with that. So we started investing in industrial properties, and we have, I believe, 9 of them now. And for the last couple of years, we've been investing in here in the Chicago market, call it Class A single family homes. In that 350 to 450 price range, anywhere between 250 and 450, kind of all in, and just holding them as long term rentals.
Hmm. Single family homes.
Single family, yes.
Wow. So how many single family homes you have?
Right now, so we just started last year. We're only at 13 right now. So
Wow, that's pretty good still. But do you see the difference between investing in single family home versus multifamily? Is it a lot more headache investing in single family?
the largest building we've ever done on the multifamily side was 18 units. I've always been a fan of single family because your upside is never guarded by a cap rate. If I have a 18 unit building, I sell it. I might get a best case scenario of a 4 or 5 cap in a good market, right? If a single family is in a good neighborhood, it takes off, and you could get 3 or 4 times what you bought it for, and it doesn't matter cap rate because someone's buying it because they're going to live in it. So I've always liked that from that side of things. When you start getting a lot of single family homes, obviously if you're not in a specific area, then sometimes the ease of management is tougher. We manage stuff all over the Chicago market, so it's less of an issue for us. But I see people they'll have single family homes, they'll try to manage themselves, but they have them all over the Chicago area. And if you're in a big city, it usually takes a couple hours to get from one side of the city to the other, and that's a headache.
I know, I agree on that. I've been there, done that. So I'm not too fan of single family. That's the reason I wanted to ask you that. So you're doing pretty well, right? You have single family homes, you have multifamily, and you have industrial now. So industrial is just like absolute triple net, or how does that work for you?
Most of them are modified gross. So
Modified.
a lot of
Mhm.
them we will have where they pay rent, and they'll pay a tax stop and a insurance stop for the most part. That's where a lot of stuff goes. So a lot of the industrial we have is called 50,000 square feet and under, and the spaces are really 7,000 square feet and under inside these buildings.
Interesting. So with your amount of experience from all the way from rehab to being invested in single family, multifamily, industrial, I wanted to ask you this question. What would you tell someone who's already ready to start to invest or think like an investor, but they think real estate is like too overwhelming? What would the advice that you give?
Yeah, so obviously, no matter what, real estate, as sexy as it sounds, is definitely risk, right? And not everyone's built for risk. I feel there's a lot more anxiety or anxiousness, and people could get too worked up watching horror stories once they get into your feed about failed deals and stuff like that. So it's really tough. But I always tell people like that, get a partner. Maybe you are a stressed out accountant. You're always worried about the numbers, but you could partner with someone that's got a little more of an appetite of risk, and you can handle all the conservative side. The best partners in real estate are the ones that one's conservative and one's not, where they actually can push and pull on each other. They almost need each other, right? The really conservative person needs someone to kind of let them know it's okay and we'll recover if something happens, and the super risky person needs someone to kind of hold them their feet to the ground sometimes when they're getting too out there with crazy ideas or things they want to take on. So definitely on the partnership side of those things. And then there's so many other ways where you could just end up being part of syndications. One of our last industrial building we did a syndication. So that was full of investors that just have a couple $100,000 that don't know what to do with themselves, don't want to deal with it, or they don't have the time to deal with it themselves.
Exactly. Mhm. And they can just go work with some syndicator and as a passive investor. So one thing you mentioned really good is get a partner. That's very important. So, how do you find the right partner you think that aligns with you? It's not just like getting into a room in a Zoom or just getting in a room, meeting personally, meeting somebody and say, oh, good, I wanted to be partner with you. And then, because partnership is just like you're getting into a marriage for 3 years, 5 years, as long the deal is, right? So, you might not get along with that person. So, what were the key indicators for you, or what worked for you? And then what can you tell us from your experience how to do the due diligence on partnerships?
Yeah, I think partners, you see them all the time. People that have met at maybe real estate meetup groups, but it wasn't over 2 meetings. It was over 4 years, right? And maybe they sat on the board of a real estate group and they did it for 4 or 5 years. Or I see a lot of father son type partnerships these days. You know, maybe the father's handy and the son's got the finance degree, or vice versa, and they're investing together. I think the goal that you're always trying to do with partnerships is to find someone that doesn't have your skill set. Because I think those are the worst partnerships, where you have they tend to be the least successful. Let's put it that way. Is if you have two people that are just awesome marketing, or two people that are super conservative, or usually the two conservative people don't match up, but you'll usually have two gun ho people that are not conservative, and they get themselves in trouble. Or so trying to find some sort of complementary skill set is huge. So, for instance, my partner right now, he's 11 years older than me. I've been partners with him for 20 plus years now. So, but he's always been 11 years older than me, which has meant he's always had a little different level of experience. He comes from a different part of the city. Has a different network of people. We've complemented each other in the different networks of people for when we need it. He has a different level of skill set. He's more of the field guy, construction guy, and he doesn't like Excel. The ability to have complementary traits is probably the biggest part. And as far as vetting them and due diligence, there's always going to be that risk, because I guess I don't know too many people that are like trying to run credit apps or stuff like that on partners. But you learn about somebody's credit after you've been friends with them for a few years, or you've been going to the same meetup or the first Tuesday of every month. You learn that they haven't bought anything in a while because they're fixing their credit. So that may be the red flag. So just getting to know people on that type of level ends up being your due diligence.
That's true. And I think the other important thing is knowing yourself first, right? You mentioned you need to find a partner with the complementary skills. So in order to do that, I think you should need to learn about yourself, kind of turn back inwards and understand who you are, what your values are, what do you go by with, and that's going to help you figure out who you're going to align with. I think to me, it just like make more sense knowing more about myself, my strengths and my weaknesses, and then connect with the right partners. Because sometimes if you jump in a partnership, it's like, not even 6 months down the road, you feel like, I mean, we feel that sometimes with the investors too, if the alignment is not right, it does not go very well.
Yeah, I think I hope that you let me riff on this for a couple of more thoughts, but I think the other thing ends up being time capacity. I see a lot of people get in a relationship with somebody for it to buy a property, and one person's putting all the time in because the other person, either his wife's not letting him do it, he's too busy with work, he travels, so time, understanding the full expectation of what you're supposed to do. But a lot of partnerships, their skill sets, no matter where they're at, what part of skill set they have, they need time, and so I see a lot of those go south that way. And then the other component is I think you have to be a good partner too.
So
This goes
true.
back to the ownership piece of, you know, I'll just think about my podcast partner. Like, he's not my business partner. He's my co-host. I always want to make sure he never thinks I'm not doing enough. And I think he feels the same way too. So that's why we get along. If we're always both trying to do 60%, then we're always usually happy with each other's output as far as what's happening. Or with my business partner, I think one thing that we're really good at is he'll have highs and lows, and I'll have highs and lows. And if we're able to really recognize where the other person's slipping and step in and cover for them, like that builds huge rapport too.
Mm. So let me ask you this question. Have you been into seasons where you thought about quitting, but what pulled you through?
I think I'm always in the seasons. I'm always in the mindset of how can I do this easier.
Um,
Going back to having too many things going on at one time, I feel I created a dynamic early in my career of trying to do too much and just making life far more difficult than it has to be. And that is something that I continuously try to break down of like, and it's even my calendar, right? So every 90 days I look at my calendar, like clear it out, things I don't want to do anymore, meetings that I just don't need to have anymore that aren't having any progress, and just kind of always trying to keep the clutter out with that.
Interesting. And you also have a podcast too, right? So, how has the sharing what you have learned opened more doors for your business and investments? Because remember how you went from Burr method and now you have full-fledged business, property management, as well as you're investing in multiple asset classes. So you just like grown as a company. So I think there's a lot of things to learn from you if you can share with us.
Yeah, I think the podcast has surprised me even in the sense of what it became. Now, the podcast originally started of, after we came back to the property management company, I was working the sales role in the company for selling property management services. And I was able to help so many people, right? But like people call up for management, I'm like, you could do this, you can rehab this, and we get more rent if you do this, and, like all this different stuff. People are failed projects. They're like, I put too much into it. I got to rent it now, and I might help them like, some trick or whatever. But I was helping people, but on a very low scale. And then when my podcast co-host came to me, he's like, "Hey, let's do a podcast." And right away, it's like, "Oh man, that means I could probably tap into so many more people, more than I could do one at a time, right? So 200 a month versus maybe 20 a month." And that was huge in that sense. Now, it was originally started as a marketing arm for the property management company. That's what the podcast is for. But what it turned into is this community that we built, and what we grew is a bunch of real estate investors here in the Chicago market that have gone through their journey with us, whether it's been going from 0 to 10 or 10 to 100. We've grown through this community, and this community has gone together. Every couple times a year we have a party. We just celebrated 5 years of the podcast. We had 175 people out there. But the most amazing part of that was all the success that all of our listeners had throughout the previous 5 years in that journey. So yes, we've had great things happen because of the podcast. We've got great team employees on the team through it. Getting business through it, reaching, connecting, as you know, probably with people that you normally wouldn't if you didn't have a podcast. And it's been huge in so many different ways. But what shocked me the most is just the community that's been built and the people that we've been able to kind of grow with around us.
And how long you been podcasting for now?
So 5 years. So we just celebrated
Ainley?
5 years in May. So we're a little over 5 years, and I think episode 387 comes out this week. So
Wow, congratulations.
thank you.
So happy for you. That's nice. So let me ask you this question. You have all these things figured out for yourself, how to connect with people. And this is like people's question, what's something people don't see on the surface when they look at a successful 20-year-old, I mean, 20 years expect. Let me say the question again. What's something people don't see on the surface when they look at a successful 20-year investor?
I think all of us, it's human nature. We look at someone successful. Maybe we look up to them. Maybe we don't. But we look at someone successful. We only really see. We always feel it's overnight, right? Like where'd that guy came
Yeah.
from? He just did overnight, and that's so far from the truth. Where everything that happened was literally a 20-year grind, and it's truly a hockey stick when you look at this, whether it be income or stress or opportunity. The doors you couldn't get into originally, talk to somebody, are now doors that you take for granted, whatever it might be. But the ability to see the grind behind the success, that's what people don't see. And that's why, especially in this world of Instagram or TikTok, where it's people don't document the journey or the grit or the grind as much as they do the new car or the success or the payday they just got. And I think that throws a mixed message to younger people of the sense of how hard you have to work to get somewhere.
But do you see anything wrong with that? I mean, why wouldn't you tell? Because it's not an overnight success, right? It took people to get there 10 years or 20 years or 30 years, right? There's a lot of grind behind it. And a lot of people, they think, oh my God, this person got it made and I wanted to do it kind of overnight too, because I can do it too. But that does not happen a lot of times, right? That discourages people. So do you see anything wrong? Why shouldn't we share that?
No, I think you totally should share it. I think the only thing that I feel bad for the, and again, this is just me like feeling bad for the younger generation. I think about my son. My son's 13, and for him
Oh,
to see people uh, make success look so easy as they do, and there are some easy successes. Some people that started on Instagram a handful of years ago, or TikTok, and grew their audience, and
I
there are
know.
a
So
lot of
yeah.
these
Mhm.
shorter term successful people,
Exactly.
and it
Mhm.
just it diminishes the importance of really grinding out. I mean, you look at some of these bigger people in our generation, Bezos, Musk, like the amount of grit and hard work they put in for decades before you see today's version of them. That doesn't get talked about enough. And I guess if anything, the younger generation, they're not seeing that or they're not watching for that. They're not looking for that because that's maybe they just don't want to or it's not in their feed. So, but yeah, no, I think that's the number one thing that people don't see is just the grit and what it took someone to get there at that point.
That's true. I agree on that. But I think one thing I wanted to highlight here is, there's multiple ways that you can build wealth. There's multiple strategies out there, If you have to pick one that resonates with you, and that might be super easy for you to do it versus, just doing it all and not getting anywhere. Not everybody's a superstar like yourself, that's what I have to say.
No, no, not like that. You know what's crazy though? How difficult or what we expect as humans. Like, a lot of people are like, I want to get to 100 doors. I want to get 1,000 doors. I want to make $1 billion. And someone came on our podcast a couple weeks ago and they broke this down. They're like, yeah, it took us about 10 years into our journey, but we realized that all we need to do is find 20 properties, figure out how to pay them off fast, and that's going to be well beyond anything we could spend in our lifetime. And I'm like, oh my gosh, it's so simple.
It is. I think simple things are always kind of overlooked, because people think they complicate things because they think like if it's more complicated, is worth their time and you don't get anywhere.
Yeah.
Simple
Yeah.
is the best way. That's
Yeah.
the
Yeah.
way I look
Exactly.
at it. So let's have a little bit fun over here. Let's move on to our rapid fire round. First of all, thank you so much for sharing all your wisdom with us and congratulations to your success. And I'm really happy for you where you are with your podcast success, with your investing success, with your property management company, your Burr method. Oh my God, you have done everything. It's pretty awesome. So my rapid fire is geared towards um, what are you doing in the market, basically. So answer is going to be in one word or one sentence only.
Okay.
So whatever comes to your mind first. So there's no right or wrong answers, So are you ready?
Yes.
So your favorite part of renovation, demo day or final walkthrough?
Demo day.
One Chicago food spot you recommend to anyone coming into your town.
Russell's Ribs in Elmwood Park.
If real estate had a theme song, what would yours be?
Oh, it's the Rocky anthem.
Oh, okay, that's a good one. Most random item a tenant ever left behind.
Stripper pole.
Oh my God. In real estate, what you be doing? What would you be doing? Mhm.
If not real estate,
Yeah, if not real estate, what would you be doing?
selling insurance.
Oh, what kind of insurance?
I don't know. I've always loved the idea that the one thing that's cool about real estate is everyone needs it to live, own, invest in. And insurance is similar. Like you walk in a room, everybody has X amount of insurance policy. So it's more of a simple, right? Like your audience, you have a larger audience. I said behind a table one day in a diner, and the guy was selling windshield wiper blades to some other guy, and he was struggling. And I'm just like, oh my gosh, like that'd be like that's such a niche like sales like approach.
I think this is the best rapid fire we have so far. I'm still stuck on the theme song you answer. Oh my God. It's such a great episode. And thank you so much for sharing your wisdom. How can people reach out to you?
Yeah, definitely. You can find me at on my Instagram, Mark Ainley, REI. Or hopefully you can put my cell phone in the show notes. You can also find me on LinkedIn and then our website, gcrealtyinc.com.
All right, everyone. So here's what we hope you take away from today's episode. Wealth isn't built in a flash. It's built over time with courage, with learning, and with action. 'Cause that's what our guests shared with us today. If you love this episode, please do not forget to share with your friends, family in your circle. And thanks for tuning in today to the Wealth Web Show. I'll see you next time. Thank you so much, Mark. I really appreciate you being with us today.
Thanks for having me on. I appreciate it. It's been awesome.
Thanks.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.